Top of the morning, top of the morning. We back at it again, another episode, and I'm just here to say we didn't get funded. If you back watching, welcome back. If you just came in for the first time, welcome to my channel. I'm an ICT concepts trader looking to perfect the craft. If my content helps, then please give us a subscription or a like. Please comment. Let's connect. Let's grow. So, just a bit of context. If you didn't catch the last episode on the market maker sell model idea we had for the GBPUSD, yesterday we spoke on a potential trade idea to the downside, where we wanted to see price trade down and allow us to take profits below this consolidation right over here, or more specifically below those relative equal lows over there. So at the time, my view on the markets was we come out of this original consolidation over there, shoot up, accumulate stage 1, accumulate stage 2, and then hit a smart money reversal right about here at a it's a H4 level, like a previous high or lower high. Let me just show that to you quickly. Oh, hello. Perfect. This is the idea, actually. I wanted it to show side by side, but we'll come back to that. Give me a sec. As you can see there, that's what that line is anchored to. While we're here, let me just put another one up top, so we just have an idea of where we are. The bottommost black line, as you can see, that's what it was anchoring on or for. Let's move over to the 30-minute. So real quick, as you just look here, original consolidation, shoot up, first stage accumulation, second stage accumulation, and then that upper or higher time frame PD array where price would ideally reverse or provide liquidity, breakdown, low risk sell, silver bullet, and then shoot down and hit or accumulate under the original consolidation there. Yesterday we had assumed, or we were looking to take this stage here. That's where we entered, and we went in heavy. Let me tell you, we went in heavy. So going into the trade, I had already accepted, like, I was detached. I was like, yo, if I'm gonna do this, I'm gonna do this, but I gotta be sure. And to the level of consciousness which I was yesterday, I was very, very sure. That's a fact. So that was the idea. 30-minute. At the time, let me just open up my journal about the notes I made about the trade yesterday. I'm just gonna read my game plan. Shout out to Umar. I'm not gonna say his surname. I don't want to butcher it. I'll tag him in the video though, out of respect. I saw this very valuable post about him, or a video or a tip that he gave, which was, prior to going into a trade, have a game plan or write that down. Write that down. And that's precisely what I did. Wrote down the game plan, measured everything out, had my stops predetermined, had my take profit objectives predetermined, my trade management or risk, trade management procedures I grew a bit through yesterday's exercise. So I will continue suit as well today. And yeah, let me just read off the game plan. Market maker sell model on the menu. We're looking at GBPUSD. This is from the journal. We have a few sell orders already in play. Entries weren't concentrated, but it's calm. If all goes well, we'll be funded by the end of the day. Looking to max my focus today. So, just in reflecting yesterday, I think definitely I went in with the idea of what do I stand to gain. That was leading my my decision making yesterday. I had the confirmation bias from the video, ICT market maker sell models video, and I guess I didn't really have the best amount of sleep. I've been off routine for the longest time, and I'm just slowly trying to get back into it, you know. I definitely think in future, instead of leading with the thought of what can I gain if the position goes correctly, I should lead with the assumption that the trade could go wrong. This is how much I stand to lose. Or you get me. Rather should go in with that as opposed to a this is how much I could gain. This is what I could do with the gains. You know, when you start budgeting or plotting on things to buy before the profits have been secured, yeah, I think I fell a victim of that yesterday. Because what I was looking at in terms of profit objective was about 900 I mean not 98.7 pips from this entry point. And remember, my entries weren't like concentrated. There was like one here at the bottom, one some there. It was really such a mess. Really such a mess. So yeah, market entry, I really use that when I FOMO in. Looking back at it now, I'll be FOMOing in hard. So just going in with the limit order and knowing where predetermined my levels are, where I want to go in, where I don't want to go in. I gotta stick to that. I have to honor that, and I look to really hammer in on that coming forward. So why did I have this level in particular to say that that's where I wanted to take profits? I measured the swing up, the last one before the price began to move downwards. So from that low here, you can see in reference to that standard deviation fib thingy. Low over there, right? Low over there, and then the high over there. So I just took it from, I put it at the top and then I pulled it a bit down to that low, and then I got my levels there. So I was expecting this to shoot down and then, but clearly I still have much studying to do. And I guess I can't even be mad because my ICT himself said it in the video that I watched that this model, it's a bit dangerous in bullish environments where you try to pick tops, but in bearish markets, it's or in a market that's been due to reverse or something towards that effect, it's more than likely or highly probable that it will play out. So I went in with the disclaimer. I still chose, even though it wasn't really a well-informed decision. Prior to me taking this trade, I had taken some spankings in the London session. So already I broke one of my personal rules that after 3 losses or so, or if I should just stop, put down the screens or whatever. But yeah, it's something I'm working on. Definitely. Like I'm just always at my desk. I really need to stop being a hermit and start adding in additional things outside of charts to help take my attention away. Um, and just set alerts so that I know that when price goes to a certain place, then okay, maybe then all right, you know. I should put attention to the charts, and if not, I should just go about my day. You know, not being a chart zombie, but yeah. Sorry, someone text me. But then, speaking more on it now, we had a number of bullish PDRAs. No, I mean bearish. Sorry, that was supporting price. First distribution stage work there. Consequent encroachment. We weren't looking for price to trade to peak too much above that. We just got a slight touch, so we're like, okay, let's go. Then price dipped here. Um, Perhaps I should have indeed looked to take off some of the position yesterday, because as you can see there, we had that sell side liquidity. Price stabbed beneath it. You can see this consolidation there. Then manipulated it out. I remember like when it was poking down the first time, no? Or the second time. I was taking a nap. I wasn't fully on the charts, you know. Yeah. But took that out. Let me just go to the 4H. I also noticed, let me just move this since you know it's a L. I noticed this as well. My apologies, my nose is a bit weird today. I took out that, low-key hit that auto block quite beautifully actually. That's kind of dope. Wow. Nice. Hit that round about 10. Yeah, hit that at 10. And price just shot up. Just shot up. Yeah, that was about 55 pips. With the lot, that could have been. Let me stop thinking with the money. Let me stop thinking about the money. Yeah, like I'm in a bit of a tricky situation. More on that later. That was an hourly order block or fair value gap rather. Let me come on see it. This was when those news, nah. Yeah, we had some fundamentals released yesterday. We had the preliminary GDP quote unquote numbers released for the US, and it was greater than what was expected. From that, I was anticipating a bearish dollar or a strong dollar against the pound. So it was a no-brainer to me, as I said in that other video, that we should get less dollars per pound now. So the exchange rate will drop or we'll see a selling move. But that wasn't the case. Governor Bailey also went to speak. I didn't tune into what the governor was saying, but I just assumed that whatever they would be saying would push further more bearish. But that wasn't the case. Reading back from the journal, I said bullish. Preliminary GDP quote unquote and GDP price index news released for dollar. Looking for GDP to continue bearish in New York session as it was bearish in the London session. And then I said for today's trade idea to be invalidated, I'd want to see price trade above the high, which was formed at 3 a.m. Eastern Standard Time on the 30-minute chart. What high was that? This candlestick here at 3, I wanted to see price stay below that. So if it traded above that, that would invalidate my bearish trade idea. At 1:30, the invalidation came, and I had closed off the trade. In total, loss yesterday was about $400. So I basically gave back 80% of the profit I had accumulated by that time. And this was before on the funded account. This is the evaluation phase that I'm currently on. This is before when I first got it. I put myself in about like 10% drawdown. 10% of my maximum overall drawdown on the challenge. I climbed out of that, then I balanced on about 200 or so profits on top of the max drawdown, and then I climbed it all the way up to about 500 or so, and then I gave back 400 yesterday. And I'm quite disappointed about that. That was the highest I'd gotten on the account. But I can't be surprised. I went into it by accepting risk. So I should take it, you know. It is what it is. I should take it. Yeah. Let me just remove this. Order block. First stage distribution. At the time, I was like, that's the third stage. I saw this respecting that order block and as well as that inversion fair value gap of the hourly. I had originally looked to buy that during the London session. You can see London, or the London kill zone rather, it opened up there, just continued to drop. I was expecting or planning to do a bullish power of 3, similarly low-key to what happened on Monday. I mean, on Tuesday, sorry. Tuesday opened, went down. I was a buyer in this area. I had originally been looking to buy that, and it played out quite nicely. I wasn't able to maximally capitalize on the move till it got there, which is one of the targets I'd projected, and it's also where I first used like a full lot for the trade. Okay, not is it? Oh, I tried to. I got knocked out, but we were moving nice. The max it got with the lot was there. I wasn't able to realize the profits. I then fell back down, and then yeah, I've just been trying to, get back to it or just grow my mind, but we're learning either way. So I thought the same thing would happen. I wanted to buy that fair value gap, but it inverted. Then I had the opportunity to carry on as a seller in this area here, but for some odd reason, I ended up closing the trade, and I wasn't able to write it down. My bias was locked in on buying. We'll run about in this area. Now I see prices just accumulating. I am just gonna tape read, not looking to take any trades. Yeah. We might do some tape reading later on. I just want to practice and perfect the art of getting narrative correctly. But until next time, we'll talk.